And now that we are officially off to the races, we do see fractional losses across the board. That is after what had been a very strong 3-day stretch in the markets. We had seen, in fact, the S&P rise more than 6%. So just kind of flattish action to round out what is looking to be a positive week for equities. Well, as we have the market open now, I do want to welcome my next guest, Ken Stern. He's a president of Lido Advisors. Ken, thank you so much for joining in studio, and just kind of a pause today after what's been a very solid week, a reversal from the volatility that we had seen on Monday. What do you make of this action?
Yeah, I mean, obviously we're all looking for answers. We're looking for direction. It's very, very hard to create a policy when you don't know what the policy is, literally. And so I think what's happening is you're seeing some positive news come out. The market wants to rally. It's trying to rally. You saw the last couple of days so strong. And I think here we are going into the weekend. There's no real definitive. There's no announcements. There's no deals that have been made. So I think it's a little bit of profit taking and a little bit of a short-term give back, a little risk off going into the weekend.
Yeah. And of course, we know that headlines are just happening in real time. It does seem to be a headline-driven market in this particular environment. What is something that could make a definitive move to the upside or the downside for stocks?
Well, we saw a little bit of some kind of light in terms of such a hardline stance against some of the tariffs, China in particular, saying that there's going to be deals. If it could be less than it is today, that's a win. And the market really liked that. What's disconcerting, though, is the bond yield is still so high. The currency is weak. We're not in a very good global, I think, look right now, and that's weighing on, you have higher interest rates, potentially stagflation, slowing economy, all this buying that came in anticipation of the tariffs in March. And now you're having this digestion period.
Yep.
People just don't have direction.
Yeah. So in terms of earnings season, of course, I think investors would want to get some direction from that, but a lot of these companies might not have that, as you're mentioning, obviously due to policy. What does that mean for the rest of earnings season, especially with Magnificent 7 companies, 4 of them on tap to report next week?
Yeah, winners and losers are very, very clear. I mean, you see that when you have a good stamp on your earnings, and somewhat positive guidance, you've been rewarded in a very big way. And those that haven't and that have been much more sanguine, if not pessimistic, there's still room to the downside. But don't forget, the long-term perspective, whatever your macro trend is, I like certain trends. I think that, when it comes to infrastructure here, onshoring, I think when you think about where healthcare is going, where long-term travel and leisure is going, when you find a good entry point because of the volatility, be very serious about thinking about how that plays into your long-term strategy. So
let's talk through where you might be putting money right now or keeping money in terms of how to navigate and maybe wait out some of the volatility.
It's a little bit of both. I mean, there's obviously this huge risk about timing the market.
Yes.
You miss the best days, you're not in, you're not going to have the same return. Maybe you could talk a little bit about hedging your bets or thinking about a little bit less risk on. But for the long term, when the stock gets into your purview and your range, and you've had this on your dream team list and you couldn't buy it, you have to take your behavioral economic out of the equation, and you got to think about the numbers first. So again, I think that there are trends that are coming into vogue right now. And if you think about all the sectors of the S&P, I mean, healthcare, finance, tech, if the earnings gives you a little bit of an entry point and you believe in that long-term story, I mean, here we were talking ad nauseum a couple months ago about no cap on AI and where that goes. And now it's such a different story. I would come back into, is it in your purview? Because there's some, I think, opportunity closer than not.
And so are there particular stocks on your dream team or dream list, as you mentioned, even sectors or indexes?
Yeah, and again, without getting into the individual stocks, I do think that the sector's technology still has growth. We still have a strong economy. We still have very low, unemployment. And although a recession could temper that, and you do need to keep powder dry to continue to average in, I do believe that the entry point right now in many of the sectors, and you can go all the way from the traditional defensive sectors such as staples and utilities, back into healthcare, back into finance, back into technology. So I do think that this volatility, it does lead to some good entries.
What about international stocks? We know that, of course, the president campaigned on U.S. exceptionalism. We had seen of late, though, some of these international sectors and indexes actually outperform.
Yeah, super interesting. And actually, if you saw at the beginning of the year, international was really getting a great bid and really doing well. And then we came back, and now you're seeing potentially, European Union actually having some real strength. I don't think of it, though, in terms of indexes. I think of it in terms of actual specific stories. And I think you got to look at the individual stocks and look at their growth.
Interesting.
Yeah.
Ken Sterney is the president of Lido Advisors. Ken, thank you so much for joining.
Thank you.
Yeah.